Today, we're going to be talking about something that can literally take money out of your bank account, and that is student loan defaults. If you've been ignoring those loan notifications, hitting decline on those servicer calls, or you're just straight up struggling to make payments, listen up because this is serious business. The government has officially resumed collections on defaulted loans as of 2025, and they are not playing around. After that long pandemic pause and all those extensions, the collection machine is back in full force. I'm talking about wage garnishment, tax refund seizures, credit score destruction, and more. This isn't just financial theory. This is real money that's not going to make it to your bank account. So put down that $7 coffee for a minute, get off of TikTok, and let's get into what you absolutely need to know to protect your hard-earned cash. Because trust me, dealing with this now is way cheaper than ignoring it. So here's the deal. After a massive 5-year pause of collections that started during the pandemic, the government is going back after defaulted student loans. This isn't some problem for other people. Over 5 million borrowers are already in default, and another 4 million are about to slip into it. That's nearly 1 in 4 people with federal student loans. So what does default actually mean? It typically happens when you haven't made payments for about 270 days. So that's about like 9 months. If you've been ghosting your loan servicer for that long, then you're probably in default right now. And private loans can default even faster, sometimes after just 90 days of missed payments. And no, unfortunately, they're not just gonna forget about your debt if you ignore it long enough. Student loans are basically like the cockroaches of debt. They survive everything, including bankruptcy in most cases. Also, the government has no time limit in collecting student loans. They can literally come after you decades later. In fact, ignoring your loans is about to get really, really expensive. When your loans default, they can add up to 25% in collection fees to your balance right away. So that $30,000 that you borrowed, yeah, it can become $500 overnight. Then they start adding interest on top of that larger amount. So let's break down what can actually happen when you're in default. And by the way, I am not exaggerating any of this. First up is wage garnishment. This is when the government takes a portion of your paycheck before you even see it. We're talking about 15% of your disposable income just gone. And they don't need a court order to do it. Also, on top of that, your employer gets a notice. And then suddenly your paycheck is lighter and you're feeling real embarrassed. Let's put some real numbers on this. If you make $50,000 a year, you can lose about $400 a month just to garnishment. That's your car payment and half your rent just vanishing into thin air. The next thing is tax refund seizure. So if you've been dreaming about that tax refund to pay for your vacation or boost your savings or to finally fix your car, if you're in default, the government is going to take the entire thing. Not a portion, the whole refund. Now, the average tax refund is about $3,000. That is a whole lot of money to lose without any warning. The third thing is federal benefit offsets. For some of you who are older that are watching or have parents dealing with this, your Social Security is not safe. Even retirement checks can be garnished up to 15%. They'll also take away your disability payments, even though they do have to leave you at least $750 a month to live on. The fourth is credit score destruction. A default absolutely tanks your credit score. We're talking about a drop of 60 to 100 points overnight. It makes it really hard to rent an apartment, especially in expensive markets, get approved for a car loan with good rates, or even land certain jobs because some companies will check your credit history. Some landlords now want a credit score of 700 plus just to even consider you. The fifth, which this one is the craziest, is professional license suspension. In some states, they can actually suspend your professional license. So if you're a nurse, a teacher, cosmetologist, or you need any kind of state license to work, your actual ability to earn money can be taken away. It's a cruel system to prevent you from making the money that you need to actually pay the loans back. And finally, the sixth is loss of eligibility. You can't get any more federal student aid if you're in default. So if you're thinking about going back to school to improve your job prospects, that door is closed until you fix that default. Now, this isn't about scaring you. It's about being real, about what happens when your loans go into default. And trust me, getting out of default is way easier than dealing with these consequences. And these are not hypothetical situations. It's happening to millions of people right now as we speak. Now, the good news is that you actually have options, even if you're already in default. And I mean real, legitimate options that thousands of people use successfully every single day. So let's go through them. Option number 1, loan rehabilitation. Now, this is the best option for most people. And here's how it actually works. You make monthly payments over 10 months based on your income. Your loan servicer calculates these payments using a formula of 15% of your discretionary income. And here's the kicker. These payments are actually usually super affordable. I'm talking as low as $5 per month, depending on your financial situation. If you're making minimum wage, your payment could literally be pocket change. And you can use your most recent tax return or pay stubs to prove your income. Once you complete those 9 payments, 2 amazing things will happen. Your loan comes out of default and the default mark gets removed from your credit report. It's like getting a second chance. This is the only default recovery option that fixes your credit report. The catch though, it takes 10 months to complete and you can only use rehabilitation once per loan. Here's a pro tip though, get the rehabilitation agreement in writing before making your first payment. Your loan servicer should send you a formal letter outlining all of the terms. Make sure you save that damn letter. Option 2, loan consolidation. If you need to get out of default faster, consolidation is your move. You basically combine all your defaulted loans into a new loan. And you're out of default as soon as the consolidation goes through, which takes about 30 to 60 days instead of 10 months. Now, there are 2 ways to consolidate out of default. You can make 3 consecutive on-time full monthly payments on the defaulted loan before consolidation, or you can consolidate immediately by agreeing to pay the new loan under an income-driven repayment plan. The catch though, it doesn't remove the default from your credit report. The default is gonna stay on your credit report for 7 years, unfortunately. And if you've been working towards any loan forgiveness program, consolidation resets your payment count back to 0. But if speed is what you need, this is your option. For people with multiple defaulted loans, consolidation can be great because you're combining everything into one loan with 1 monthly payment. Option 3, set up a repayment plan. If you just got the notice about wage garnishment, you have a 30-day window to act. This is critical timing. Call your loan servicer immediately and set up a repayment plan. If you do this within 30 days, you can stop the garnishment before it even starts. Your employer will never know about your default if you act within this window. Once the garnishment actually starts, it is much, much harder to stop. With a voluntary repayment plan, you might actually be able to negotiate payments that are actually lower than what would be taken through garnishment. And you maintain control of your money. Option number 4, request a hearing. If you think that garnishment is wrong or that it's going to cause you financial hardship, you can request a hearing within 30 days of receiving the garnishment notice. Now, during this hearing, you can explain your situation and potentially prevent or reduce the garnishment. But it needs to be a valid reason. So some valid reasons include the loans aren't yours due to identity theft, you're already repaying the loans under a formal agreement, or you've already repaid the loans, you're experiencing extreme financial hardship, so like you can't afford your basic necessities, you filed for bankruptcy and the case is still open, you're totally and permanently disabled, and lastly, you were working less than 30 hours per week when you got the loans. The hearing can be in person, over the telephone, or written. Most people will choose written or telephone hearings just because they're more convenient. Option number 5, pay it in full. If you've come into some money or you have savings, paying the defaulted loan in full is always an option, guys. Request a payoff letter first so you know the exact amount, including all the fees, and make sure you get written confirmation once you've paid it all off. Now, these options are not pie in the sky dreams, okay? Over $22 billion in student loans have been discharged through these options in the last few years alone. So check if any of these apply to your situation because it could literally save you thousands of dollars. Now look, I get it, guys. Dealing with student loans is probably about as fun as having a root canal during a job interview, right? Like seriously, nobody wakes up excited to tackle their student debt. But here's the honest truth. Taking control now will save you serious stress and money later on, like thousands of dollars of your money. If your loans are currently in good standing, consider setting up autopay. Most services give you a 0.25% interest rate reduction just for using autopay, which can save you hundreds of dollars over the life of your loan. And that's it, guys. If this video helped you understand what's happening, smash that like button because it helps more people see this information. And it helps me as well, too, obviously. If you know somebody who's been avoiding their student loans or they're at risk, share this with them because you will literally be saving them thousands of dollars. Student loan default isn't something that people talk about at parties when they're getting lit, right? But it affects millions of people just like you and me. And finally, hit that subscribe button because I break down complicated money stuff like this every single day in a way that actually makes sense. No finance degree required. Let me know in the comments what other student loan topics you want me to cover. Loan forgiveness, income-driven repayment, how to pay them off faster. I'm here to help you guys. And that's it, guys. I'll see you in the next video. Peace.